BALKRISHNA Industries, a company of strong financials with leadership in the niche market segment, constant capacity upgradation, but surprisingly facing price fall for over a couple of months now. BALKRISHNA Industries is a well-known name in the specialized segment of highway tires used in mining equipments, earth movers, tractors, to name a few. Product range with great depth, over 3,200 stock keeping units, finding application in port, mining, industrial, agricultural and construction activities. Production base strongly rooted in India, in the three states of Maharashtra, Rajasthan and Gujarat. With domestic consumption being around 17%, BALKRISHNA Industries largely exports to Europe to the extent of more than half of its turnover. About 17% goes to North America. Rest of the world countries take around 15%. An export giant, Europe and US, taking almost 70% of total turnover. In terms of the industry it serves, agricultural industry takes about 65% of its market, and in terms of the clients, replacement demand takes the lead, forming about 70% of sales. OEMs and others form the balance. Among the inherent strengths of BALKRISHNA is its captive carbon black units with constant upgradation, and also its captive power unit, which have been a source of strength by saving significant amount of cost. BALKRISHNA Industries has the privilege of strong operating leverage emerging from constant capacity expansion, regular technical upgradation and modernization, besides strong backward integration projects on planned schedule. I am Vittal Prabhu with Stock Learning Simplified weekly video. Hope you will find the video interesting and informative. Over last 8 quarters, BALKRISHNA had revenue going up every quarter, but was not supported by EBITDA in this journey of going up. Particularly during last 4 quarters, the growth recorded in revenue ranged from 31.3% going upwards to 45.3% in the latest quarter. But the disappointment was in EBITDA percentage, which constantly kept falling from a peak of 34.2% in September 20, coming down to 28.4% in June 21, and depth was found in 16.9% of June 22. Even in absolute amount, EBITDA went on falling quarter after quarter, coming to a low of 444 crores in the latest quarter. The damage was done by higher rubber prices and also crude prices, and playing havoc with the financials was mounting logistical costs and transportation expenses. Operations over last 8 quarters registered on a TTM basis a strong increase in sale quantity, taking it to a high of over 3 lakh metric tons by June 22. But EBITDA was a disappointment. Of course, it moved up to 8,078 in June 21, but what followed thereafter was a persistent fall, taking it down to 6,401 by June 22. But realization per metric ton was on an increase, moving from 24,000 level going up to around 26,000 in June 21 and taking a peak of 30,000 in June 22, but the increase in cost was steeper than improvement in revenue, more particularly from the level of 17,708 in June 21, at which level the EBITDA was around 8,000 per metric ton. But the cost escalation in subsequent months was so high that improvement in revenue was around 4,250, as against which the steep increase in cost was of the order of around 6,000, and this resulted in erosion of EBITDA to a large extent, bringing it down to the level of 6,400. Price hike could not cover the extraordinary increase in costs fully, and EBITDA had no option but to surrender and shrink. With its market largely in Europe and America, the weather conditions of Europe and its impact on crop yields, geopolitical situation of Europe, fears on recession in US, and volatility in forex market are all contributing to the worries of Balkrishna Industries. FY22 is quite noteworthy for operational cash flow of an highest amount of 1,737 crores. But concern is the buildup of current assets to the extent of 829 crores during the year. Added to that was dividend of over 560 crores, both eating into the operational cash flow. As a result, the operational surplus for the year is weakened at 348 crores. But company's ambitious capex plan, spending over 1,600 crores during the year, quite abnormal. Company had to get financial support to the extent of an equal amount. That is a burden on the company. Growing capital expenditure, build-up of current assets, causing strain on the financial performance of Balkrishna Industries. Impact of external funding is quite evident comparing equity with total assets. Equity has grown, but total assets have grown more than proportionate, more particularly during the latest year. Equity as a percentage of total assets. In FY21, equity of 6,000 crores supporting total assets of 8,166, giving 73% support from equity. But that support dwindles in FY22 when an equity of 6,933 is supporting a total asset base of 10,979, suggesting 37% external funding to the total assets. While additional assets help get operating leverage, the financial burden from external funding will weaken the profitability of the company. Quite evident from the daily chart. The company had 52-week high last October, and this March it had a 52-week low. The current market price is at a discount of 30% to 52-week high. The Fibonacci level is well below the threshold of 23.6. The price has been falling down and stays below 20 EMA and 200 EMA, placing it in the bearish zone. And for over 3 months now, the trajectory has remained descending and below 20 EMA, and that is a concern. From the price action data for the last 3 months, average price has moved down from the level of 2,098 to 2,862, a fall of about 11%, price falling. Average quantity has moved from 453,000 level to 249,000, a fall of almost 45%. Delivery percentage has remained almost constant at 44%, not much significant, whereas quantity per trade during the period has diluted from 15 per order to 10.7, a fall of 28%, with the implication that the price action is more bearish with still steam left in it. Company's shareholding pattern is a reflection of risk perception in non-promoters, particularly mutual funds who have reduced their stake from 14.1 to 11% during last 4 quarters. So also FPIs who have reduced it from 15.2 to 14.3. No pickup by DIIs and the offloading of mutual funds and FPIs getting added to retail and others. Risk perception of mutual funds and FPIs remains negative as of now, and that is quite evident. As regards immediate positives for Balkrishna Industries, its price earning multiple has remained below its own median and below that of the sector, As regards dividend payment, the payout has remained decent and the yield quite impressive, and on the cost front, substantial softening is being observed of late, both in terms of material prices and cost of transportation. Hope you found this video on Balkrishna Industries to your expectations. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your time and valuable support. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.